Hey there, Sharon Horne-Ellstrom here. Welcome to day 192 of our Let's Grow annual challenge. This month we're focusing on financial growth, and we just knocked out the SOAP framework, which is our way of dealing with challenges, obstacles, setbacks, problems, anything that comes our way that we need to deal with in the way that's best for us. We apply the SOAP framework to. Well, today we're switching gears and we're talking about income and KPIs, key performance indicators. Now I have a business brain. I've been involved in businesses since I was 13. My dad was an entrepreneur as well as working in corporate America, which is why I think I took that same path. But today we're going to talk about what are some different sources of income, different types of income, and then in a few days, I'm not sure when it's on the schedule, but we're going to actually talk about the power of multiple streams of income. But not today. We'll just talk about different types, and you're going to share your number one source of income right now in the comments below. And then as far as KPIs, which stands for key performance indicators, which is definitely a business thing, but we can apply it to our life as well. How do we know we're growing? How do we know we're progressing? How do we know we're moving toward our goals and objectives? Kind of talked about this yesterday with the P in the SOAP framework being progress. How do we measure? How do we know? So we are going to share as our second part of our action item today, our number one way, the number one thing we look at, the key performance indicator that indicates to us that we're on the right track with respect to our financial growth. For me personally, it's the balance in my investment and savings accounts, because I don't invest in my savings account or my investment accounts or my portfolio income unless I've already taken care of everything else in my life and I'm building that as part of my legacy. So that's the key performance indicator for me. If I have to tap into that for any reason, or if I choose to tap into my savings or investment accounts for any reason, it is of course then telling me I'm moving backwards with respect to financial growth, but it might be because I'm using that for an investment that will give me a bigger return in the future than having it in the investment that it's in. All right, again, topic for another day. We'll talk about investments. There's so many topics with respect to financial well-being, financial health, and financial growth. I got to double some of them up on our daily challenge. That's why we have 2 questions to answer today. Well, what are some examples of things we could measure for finances? I do balance in my investment accounts plus balance in my savings accounts, and that number is probably my it's not my total net worth, because I got a bunch of assets and things that don't have anything to do with those 2 things, but they're the indicator whether I have flexibility and the ability to invest in different things or not. But you can measure things like revenue growth rate. How fast is the balance in any one of your accounts growing, and track that. You can measure portfolio margins. You can measure return on investment, which is, being a project person and an engineer, that's one of my favorite. I don't do it if I'm not going to have the right return on investment. Cash flow. Cash is always important. Never know what's going to come up in life. Debt to equity ratio for how much do I owe versus how much equity do I have. What is my net worth would be another one. And you don't have to make it hard. You can go online and find a document to use and update periodically. You can go to your bank and ask them for a personal financial statement. You can fill that out and do that, say, once a year or once a quarter, once every 6 months, whatever works for you, and look at the numbers and the ratios for all of these things. Well, customer lifetime value would be a business one, so it might not apply here, and gross margin probably doesn't apply for our personal lives either. What are some types of income sources? There's 3 primary types of income sources. Our active income, things that we actually do something in exchange for money. We provide value, we get money in return. That would be our jobs, our salaries, our any bonuses or commissions or wages that we make. Passive income is income that we generate for not having to actually be involved in it. So rental income is a good example of that. Royalties, no, wrong one. Passive income would be, royalties, dividends, and rent for, say, example, you write a book and you get paid because people buy that book a little bit every time. That's an example of passive income. You did something once, but you get paid for it over and over and over again. Actually, my favorite type of income, right? I create something once and it helps me to earn money in different areas and aspects over and over and over again. And finally, portfolio, which would include dividends, interests on investments, stocks, bonds, things like that. And capital gains, of course. When we have capital gains, we pay taxes. So what's our action item today? Your number one source of income right now. And number two, what one number are you going to look at going forward from now at least till the end of the year to indicate and give you an idea, a key performance indicator of how you're growing financially. Any questions? What do you do? Hit me up. Todd's story and a big write-up is in Guide to the Let's Grow Annual Challenge private Facebook group page. You can go there and check that out. Any questions? All you have to do is ask. That's what I'm here for. Have an awesome day. Of course, be with you tomorrow.